Hello everybody, welcome back for another YouTube video. This is going to be our daily cryptocurrency market update video, and we are going to start things off rather confusingly to some of you, but it's going to make a lot of sense with the US dollar versus the Japanese yen chart. The cryptocurrency market is currently up today. It had quite a brutal might not be the right word, but quite a strong sell-off going into last night. For myself in the UK, and essentially waking up this morning, the cryptocurrency market is up. Bitcoin is up 2.3%, Ethereum is up 3.8%, Chainlink up 5.1%, and then we have a number of other coins, some doing better, some doing worse. So why has there now, and what I'm going to do in this video is actually prove to you that cross-market analysis is vital in understanding where this space is going. I trade these markets and have been actively trading these markets for a while now. We're taking a bit of a break off during the Christmas period. And I've found it, if I'm being 100% bluntly honest, and you guys get nothing but honesty from me, I'm not the best trader in the world, but I am indeed a trader. I found it increasingly challenging over the past 2 months to trade this market, and I think the reason being is because I look at the market technically, we look at it on small time frames, but there's been so much economic data, and right now the sort of global economic landscape is so skittish that I found it very hard to trade because we're constantly getting changes that are affecting the market. Some are expected, some are unexpected, some are expected and have unexpected consequences, like what we've seen with the CPI, with the FOMC, with data reveals, with jobless claims, all this sort of stuff. And of course, why we're starting with the US dollar and the JPY is we know that Bitcoin and the dollar are exceptionally correlated. We know that there's a huge correlation there between Bitcoin and the dollar, okay? You've got to remember that Bitcoin is paired against the dollar when you look at it. And since we'll start with the dollar, and I do still think the dollar is going to reaffirm, by the way, guys. I just think that this down leg is very explainable. It's to do with what's happening with the Central Bank of Japan. We know that markets have actually really benefited off of this pullback in a larger uptrend for the dollar. We can see this is the S&P down here. Bitcoin, unfortunately, didn't benefit from it because of the FTX bill, but essentially everything's really benefited. And the dollar to me looks like it's putting in a bottom, or this is going to be a local bottom, and we're going to start to reassert. However, the dollar is being a lot weaker for longer than I guess expected. And the dollar, so let's go back to our US dollar JPY chart. Why is Bitcoin and the crypto space up today? Well, this is the US dollar against the Japanese yen. Okay, and you can see this is a daily candle, ladies and gentlemen, and this has everything to do with the fact that the Bank of Japan shocks global markets with bond yield shift. So the Bank of Japan is, I think, a blueprint for how the rest of the world's economies are going. They're just this consistent. It's just an unprofitable country from every angle, and it's a country that's doomed for economic disaster, in my opinion. The policies of the Bank of Japan just kind of seem like fairy tale. They just seem like they're now basically saying, look, the money that we use in our country, we are just going to print at will. We're going to hold up a debt market that nobody wants, and they really devalue their money consistently. More so than any other country, but there's always been this kind of weird strength against other currencies, which is kind of weird, but we won't get into the sort of economic scope of the Bank of Japan. But essentially the Bank of Japan have came out and they've moved their sort of needle in terms of what they may or may not buy. This has caused the dollar or the US dollar Japanese yen pair to really sell off harshly. This, of course, has transpired through to the Dixie. So the Dixie isn't massively paired against the Japanese yen. Of course, the biggest one is the euro. And we can talk about that actually in regards to FX, because you do see the 10-year yields actually climbing for the EU. But we've seen the dollar sell off on this news. Now, this is why gold is at 1.18%. And this is why crypto is up, because there's lots of bots and algorithms that will run concurrent to other markets. So they'll essentially trade off of what other markets are doing. We can see with this dollar weakness, we've got gold up. We've got the FTSE up slightly. Asian markets are slightly down. And we also have stock futures which are down. Now, Bitcoin has appreciated, and I think this rally is solely based on what the Bank of Japan have done. Now, for me, markets are it's so common, by the way, guys. Can you see how you've ran this? You've taken all these longs out, and now you're going to take all these shorts out. This is what markets do, guys. On a smaller term day trading time frame, this is what they do. They'll take liquidity from both sides, and I'm sure you guys that are active traders or have tried your hand at trading will always feel or have had this notion that your stops are constantly getting ran. There is an element of that because of how the market kind of works in regards to it will take liquidity to both the sell side and the buy side. But I don't think that this is Bitcoin's strength that we're seeing right here. I think this is more trader driven, and it's trader driven off the back end of a weak dollar. So we're still all dollar long, by the way, even that we've rode it throughout this entire pullback, but then we've been in since sub 100. This is the reason that crypto and Bitcoin is currently seeing this sort of a rally, which is very insignificant in the grand scheme of things, is simply on the back end of a weak dollar. Crypto right now is weak. If you look at altcoins, you will see that they're at key levels. In fact, many of them have almost retraced. Let's take Chainlink, for example, which is one of our favorite altcoins. You're at this key level right here, guys. If you look at BNB, it's coming back down to this area. And if they fall through it, which I think is going to happen, Cardano has already very much led the way. We did a video on AD yesterday. And it's slipped through this sort of floor, if you will. That's coming for all cryptos. Right now, you're just getting traders. Basically, what they'll do, again, just like the bots, is they'll look at the dollar. They'll say, okay, well, the dollar might have a bad day because of what's happened with Japan. We know gold's appreciated off the back end of that. This is very much a trader-driven Tuesday, nothing's really happening rally that we're going to see. But I still think that if we look at the stock market, for example, this is heading lower. We called all this. Ignore this draw for now. I think we looked at this in yesterday's video. And ultimately, everything is going to sell off lower. So charts don't just go. It's even though we know there's more downside, but we'll call the rallies on the short term, it's never going to be a straight down path. And there are going to be areas where you are going to get a bid. So maybe the stock market, you'll look at it, it's sort of descent previously. It usually has bids. So it comes down, bid, gets a big bid. It usually gets a bid sort of halfway down its trajectory. So maybe you get some sort of a bid like this before you do something like that. And this could be on the back end of a weak dollar. And why is the dollar weak? Well, we covered it this morning. It's to do with the US, or we've just covered it. It's to do with the US JPY chart. And it's to do with the fact that the Bank of Japan have essentially came out and said that they are going to alter their sort of yield curve control. And this, of course, has put a bid under the JPY and extended potentially the dollar's pullback. But it's a matter of time before this comes back with a vengeance, in my opinion, guys. It really is. Whether it puts in a new low here, whether it runs this slightly, it's going to be very telling. We've always said that the pushback that we had, this was looking like a very strong pushback. All systems go. And then, of course, you have a central bank come out and basically manipulate markets completely with surprise overnight, major effect, causing sort of monetary policy. So it's what I think is why I found the market quite hard to day trade. When you're down on these 5-minute charts, you're really looking technically. You should bear in mind news. It's very, very common that you run liquidity here. So you've ran these lows, you've come up, you've held it, and now you've ran these highs. You could maybe run these ones up here, and then you'll get that kind of continuation to the downside. This market is going down. Crypto is absolutely going down. The problem that we have with, and we've been saying this for ages, and we're still saying it now, even though we're at these really low prices. The problem that we've had is the crypto market was pumped full of money. I was watching something, I think it might have been from CoffeeZilla or something on Logan Paul's crypto project or crypto game or something like that. It got to $2 billion in terms of market cap before it even launched. That's the problem when you print all this money. It finds its way into markets unwarrantedly. And then you get that kind of letting out with what the Fed are doing of that hot air. And this is why Bitcoin's got to where it's got to. And in my opinion, we're moving into a new age for crypto, and that's the age of adoption and usage. We're not there yet. We're still speculative. We trade just like the stock market. You know, there's not mass adoption taking place, which is all still to come. You should be very excited to be in the space at this time. But we've just moved off of markets, basically, off of everything else. And I think that, you know, this is still yet to... I think we're still entering a period where money is tight and people will take it out of what they can, and crypto has a large retail participants. I think institutional, if you look at this has just been people exiting. I think there's another event coming that's going to take us to some lows. And people have literally said to me every single way down, every single time that we've rested, oh yeah, well, you know, you're too overly bearish. The answer is no. You know, we've called all of these from here. I made a huge mistake here, and I didn't look at the whole bigger picture. I got kind of caught up in the party, I guess, and we're still expecting higher prices and for Bitcoin to maybe go on and put in a marginally higher high before it ended. But we've called all of these down legs, and guess what? We're calling for another down leg here, and I think that's because broadly things haven't changed. However, you know, the rally today is caused by... if you're looking for answers with, well, why is crypto rallying? Well, guys, and I'm teaching you all of this, go and check your charts. Go and check your cross-market analysis. There is a bit of a danger zone here, I think, for the dollar. It could, you know... This is something that we're going to be watching very closely and be reporting on and letting you guys know what the score is. But if you're wondering why crypto's up today, it has nothing to do with the crypto market. It has everything to do with traders and everything to do with the dollar being weak. People will bid that up and take that weakness for strength in the crypto market, correlate it to that, based on what the Bank of Japan essentially have done. So that's all I've got for you in this video, guys. If you enjoyed the content, like, so appreciate it. So as a comment, and I look forward to seeing each and every one of you in the next YouTube video. Hopefully you guys are learning something. If you are, please smash that like button, hit that subscribe button. Guys, this is one of the most genuine channels out there, and it's going to stay that way. It's why we continue to make content during a time where, you know, it's rather unpopular to do so. But it's for you guys that we do it. That's all I've got for you in this video, guys. You enjoyed the content. Again, like, as always, appreciate it. So as a comment, catch you in the next YouTube video.